The new coronavirus strain raised concerns among speculators who were targeting annual oil highs. Oil prices tumbled after an impressive rally on Friday. The current decline may well turn into a downtrend. As a result, lower oil prices dragged the ruble down. Apparently, investors' hopes over the future without COVID-19 and high demand for oil have been dashed. The latest news from the UK has brought market participants down to earth. Due to the spread of a new variant of the virus, the UK government was forced to introduce a fourth tier of coronavirus restrictions in London and almost the entire southeast of England. Thereafter, other countries reported restrictions on travelling to the UK. Thus, optimism about mass vaccination took a backseat. Speculative investors who expected favorable conditions for the next year are likely to be more cautious. The energy market opened the week with sharp losses. Both benchmarks bounced off their important psychological marks, losing more than 5% in value. Brent crude oil futures for February delivery slipped below $50 per barrel. The price of the nearest WTI oil futures contracts fell below $47 per barrel. Judging by the rapid response of sellers to the news on a new coronavirus strain, oil quotes are expected to edge even lower during the session. The news about a new coronavirus strain on the eve of Christmas holidays spoiled a festive mood in the global markets and boosted demand for the US dollar. Experts are set to provide a detailed genetic assessment of the new virus strain. All we know now is that it spreads 70% faster in comparison to the older one. This news offset the positive impact of the reports that US lawmakers had finally agreed on a long-awaited relief bill. Brexit talks, stuck on disagreement over a number of major issues, also contributed to cooling investor risk appetite. There are growing concerns that the talks could collapse without a deal. Against this background, the ruble plunged against the dollar. The dollar-ruble pair recouped more than 2% of its previous losses and surpassed the 75 mark. Investors are expected to continue to monitor the coronavirus situation. The risk of more stringent measures in various countries of the world could hit demand for risky assets and oil. Falling developing nation currencies as well as pressure from the energy market will lead to the negative dynamics in the ruble. Today, the greenback is likely to head for the next technical resistance of 76 rubles. The Russian currency may fall even lower since major investors tend to hedge their ruble positions by buying a foreign currency at the end of the year. That's all for now. Thanks for watching and stay tuned.